Federal lawmakers from across the state, along with Governor Kathy Hochul, are opposing a tax break rule that some say are costing middle-class families their hard-earned money. 7 News reporter Lexi Bruning live in studio tonight with more on the state and local tax deduction cap. Lexi, this is known as the SALT cap, right?
Yeah, Jeff, the state and local tax deduction allows taxpayers who itemize expenses when filing their federal taxes to deduct certain taxes paid to state and local governments. Since 2018, itemized deductions have been capped at $10,000, a limit implemented by then-President Donald Trump. Ahead of his inauguration, a delegation of federal lawmakers from New York State will travel to Florida to Mar-a-Lago this weekend to discuss the cap and the possibility of eliminating or increasing it. Local accountant Gary Rowe says eliminating the SALT cap will help North Country people who may have multiple properties, like a home and a cottage or camp, where their total property tax exceeds the $10,000 cap.
When these revised rules came out in 2020, or effective 2020, they were given a 5-year sunset provision. So they're all going to expire at the end of 2025 anyways, and Congress will have to make up its mind whether or not they're going to continue the rules on or revise those rules or whatever.
Locally, Assemblyman Ken Blankenbush opposes the appeal. He says his district consists mainly of middle-class residents who take the standard deduction rather than itemized because there's more financial benefit. He says the governor should focus on lowering taxes across the state instead of just targeting the SALT cap. Jeff.
Lexi Bruning live tonight. Lexi, thank you.